Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the markets for the week of the 21st of March until the 25th. Before we get started, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. And information that relates to past performance is not indicative of future results. Now with today's webinar, we'll be kicking things off as always looking at stocks. We're going to be looking at these two stocks that we mentioned in last week's Lookback webinar as well, for whoever attended that one. The two stocks that I'm talking about are Adobe and Nike, who had their earnings reports this past week. We're going to start off with Adobe first, and meanwhile I'm going to pull up their chart as well and keep this on the daily time frame. Now Adobe, as we said, they had their earnings report this past week. They reported the figures on Tuesday after the market close. The company beat its revenue estimate by 0.51%. and the earnings per share estimate by 0.79. Now something worth noting, and not to confuse this report with the ones from other companies, this was the earnings report for the Q1 of 2022, whereas if you remember from the other webinars we've held previously, we're looking over at reports from companies reporting their numbers for the fourth quarter of 2021. Now, while the company is also impacted, of course, by the ongoing war in Ukraine, Adobe was still able to achieve a record revenue of 4.26 billion in the first quarter, which also represents a year-over-year growth of 9%, which is pretty impressive for a stock like Adobe. We may see the true impact, however, with the Q2 earnings report as well, with regards to the war, because obviously it's taking place now, so when the figures were reported, the period that was taken into consideration was up until the end of February. And if you remember, the war was just at the beginning stages towards the end of February. Now, overall, as you can see from the chart that we've pulled up as well, Adobe was up by almost 3% on the day of Tuesday, with obviously further volatility following on after the day after the reports were released. On the technical side, we can see that it broke above the 21 EMA. Depending on how the next week is going to start, whether it's going to gap down below it or gap up and stay above the 21 EMA, we can expect the market to be moving towards that direction. The next one, like we said, it was Nike, so I'll pull up the chart in the meantime as well. Now Nike, they reported their figures before Adobe was on Monday after the close. The report was again for Q3 of 2022 this time. Nike beat the EPS estimate by 22.09%, while the revenue estimate was beaten by 2.58%. Now, they cited that the positive results likely came thanks to greater demand in its home ground in North America. Reason being is because that its sales in North America climbed by 9%, while the sales in Greater China, which is also the company's third biggest market, fell by 5% from the previous year. Now, overall, on the day on Monday, the company's stock price was up by 0.4%, whereas we can see here the day following Monday, the prices basically gapped up a lot stronger, and the prices gapped up by almost 6%. Even though we can see they retraced lower towards the end of the day, still the gap up meant that the stock was able to close the day, positively. Now, next up, we're going to be moving on to FX. And in Forex, last week, one of the currencies that was one of the main movers, if you want to regard it this way, was actually the Japanese yen. Now, this came off the back of comments made by the Bank of Japan Governor Kuroda on Tuesday, who stated that Tokyo would need to maintain its current monetary policy as their economy is still within the very early stages of recovery. Now, these comments saw the Japanese yen plunging to a 6-year low, and just on Tuesday alone, the pound and JPY rose by 1.82%, or 286 pips. So if I switch on the pound yen, you'll be able to see this is the candlestick that I'm talking about, which was on Tuesday. We can pretty much see that over the past couple of weeks, the Japanese yen has been weakening across the board. So the movement upwards could be either two factors. One is weakness of the Japanese yen, and secondly, it's further strength with regards to the pound. Obviously, we have expected the ongoing conflict between Russia and Ukraine to give the Japanese yen a little bit more strength, since it's considered one of the safe haven currencies. But if we zoom out, you can pretty much see since the beginning of March, more or less, is when this strong surge started going on. And aside from the pound yen, we also had the euro Japanese yen, which also posted a pretty large gain. So if I switch to the euro yen, I would see a similar story more or less with this large green candlestick. The euro Japanese yen rose by 1.2% or 157 pips. And lastly, we can also look at the US dollar Japanese yen, which this one rose by 1.08% or 129 pips. And again, similar story as the other currencies. Beginning of March is more or less when this strong rally started happening. Next up, we'll be moving on to oil. Now, for oil and gold, the main driver for its prices is of course still the ongoing conflict in Ukraine. For oil, we obviously also have the oil inventory report on Wednesday, still affecting prices significantly. Now, if I just pull up the chart so we can look at the technicals a little bit as well, I'll just switch on the weekly time frame. Now, looking at the technicals, the prices are still trading within the highs of about 10 years ago, hovering just above the $100 mark. We can see now it's trading around 111. Now, the RSI, it's still at the top of the range, currently sitting at the 72 mark. And it's actually forming, we can see here this little peak here, another higher peak, and then the lower one here. It's kind of forming like a head and shoulders on the RSI itself. So this could, if it does materialize, we could see prices being pressured even further with regards to oil and dropping back down below $100 in the coming weeks. However, it's of course important not to forget about the fundamentals, since if we are to see supplies of oil being tightened even further, with the key players not looking to intervene, and with the US not yet tapping into its oil reserves, prices could very well see even further increases, and we could go all the way back up to the highs here, which is about around 124. Switching to gold, it had more or less of a quieter week compared to last week, where prices tumbled by 3.33% or $66. Of course, the two main events that traders will be looking at is again the conflict in Ukraine, as well as any further updates with regards to the rate hike cycle in the US. If we get any further hints to a more aggressive rate hike cycle, it could result in gold facing significant headwinds after recently tapping, as we can see here, it tapped and crossed above the $2,000 mark. It briefly reached it went almost all the way up to 2,100. So yeah, we could see if the rate hike cycle becomes more aggressive, and we could see further strength with regards to the US dollar. Since gold is not yield bearing, we could see investors flocking out of gold and back into riskier assets or currencies. So you could see prices being pressured and moving further lower. And yeah, there you have it. This is as far as the look back and review for last week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.